What's up, dreamers? I'm Zeke, and welcome back to the Dream Green Show. If you're an experienced investor or a beginner investor and you're tired of picking these individual stocks that just keep draining your account and you don't know which way to go in order to be successful inside of the stock market, well, consider investing inside these 3 ETFs. And these are the only 3 ETFs that you need in order to set yourself up to have the best portfolio for retirement later down the line. If you consistently invest inside these 3 ETFs, you don't have to worry about anything at all. You don't have to worry about what's going on inside the stock market, what's going on with these individual companies. Just invest inside these 3 ETFs, and I promise you, you guys are going to be fine. But before we dive into it, consider joining the Patreon. Right now, if you join the Lucid Dreamers team, I have 7 pro day traders in there that post their option trades every single day. So if you want to be a part of a group of investors and a group of traders that want to be financially free just like you, consider joining the Lucid Dreamer Row. If you want to join the Dream Team and make even more money and be a part of the Zoom calls every single Sunday, consider joining the Dream Team. Now I'm back. Now the first one I'm going to show you guys is QQQ. QQQ got around 120 different stocks inside of his portfolio. If you guys look right here, they are heavy inside of the technology sector. And I said all the time, tech stocks, when they moving, they taking off. But when tech stocks is pulling back, they take the hardest hit. But the good thing about that is that they also recover the fastest. So when the economy is pulling back and tech stocks is going to take the biggest hit, they also recover the fastest and grow the fastest. So when we're looking right here on QQQ, ticker symbol QQQ, they're at $532.71. You guys can see these are their top 10 holdings: Microsoft, Nvidia, Apple, Amazon, Broadcom, Facebook, aka Meta, Netflix, Tesla, Costco, Google. So, and then they have 102 other companies. So they are kind of diverse, but more than 50% of their portfolio is inside of tech stocks. And I dollar cost average $20. No, I dollar cost average $40 every single day inside of QQQ. If you guys want to check out how that portfolio is going, click right here. It'll take you to investing $40 into QQQ every day, and you guys can see exactly how much money I've made just from regularly dollar cost averaging in on QQQ. So if we pull up QQQ right here, this is the day chart. If we go all the way back, let's go all the way back to maybe a couple of years ago, you guys can see one thing and one thing clear. QQQ only goes up all the way back from 2019. QQQ only goes up. The yellow line shows what would happen if you dollar cost average in on QQQ every single day. Most of the time you'll be gaining money. It'll only go up, and sometimes you'll actually be outperforming QQQ if your dollar cost average in right here, like when the yellow line is above the trading stocks. But if we look at it long term, just keep going long term, QQQ literally only goes up. It takes a big hit when it takes a hit, but over time, QQQ literally only goes up because it has America's top technology companies inside of its portfolio. The second stock I'm going to bring you guys is SPY. It tracks the S&P 500, or you can invest inside VOO because the expense ratio is even lower. So if you're looking at VOO, if you're looking to invest inside SPY but don't want to do any option trading on it or don't want to sell any cover calls on it, then you could invest inside of VOO. It's the same thing, lower expense ratio, except for selling cover calls on VOO is not worth it. If you don't know what selling cover calls is, then just invest inside of VOO. VOO got the top 500 American companies in it. That is considered the market. If you could outperform the market, they're talking about SPY VOO. That's what they mean. I want to outperform VOO. I want to outperform SPY because it tracks the top 500 companies in America. So they are a little bit more diverse. If we take a look right here and type in SPY, you guys can see that they are more diverse. They do have 33% inside of technology, but they also spread it out: 13% financials, 10% consumer, healthcare, communication, industrial. So there are more spread out. You guys could take a look at the top 10 holdings right here. And right now they have 504 different holdings inside of their portfolio. And then once again, you guys can see if we type in SPY right here on the day chart, this stock literally only goes up as well. If we screw, no matter how far back you go, we're all the way back from 2012, 2014. This ETF only goes up. So if you're tired of just guessing inside of these stocks, oh, I'm gonna buy Coca-Cola, oh, I'm gonna buy Nike, oh, I'm gonna buy this, I'm gonna buy that, and you hitting and missing, just put them all inside of one bag, one grocery bag. So therefore, you can just make one trip to the car inside of one grocery bag other than picking up individual cans out the back of your car and having to take multiple trips, drop a can, pick up a can, drop a can, pick up a can. Nah, just take one trip to the car with everything inside that grocery bag, bring it back, set it inside the refrigerator, and let that thing chill, cool, and grow. You know what I'm saying? So it's the very easy way to invest inside the stock market. The last one I'm going to bring you guys is SCHD. I invest with $20 inside of SCHD every single day. If you want to see those results, click right here. Now, SCHD has the top dividend paying companies inside of its ETF, right? I'm gonna show you guys how I'm setting myself up for passive income by the time I'm ready to retire. This is my retirement stock. This is SCHD. All right, so here we are on the dividend calculator. This is SCHD. I have 482 shares currently right now that I invest $20 into every single day. The expected annual growth, if we're looking at SCHD over the last 10 years, they increased they're up 106% over the last 10 years. So that's around 10.6% every single year. So if we come back over here and we'll put in, let's say it grow 10% every single year, we're going to invest for the next 25 years. And let's look at their growth rate. Let's click on dividends. Right here on dividends, you guys can see that they have a quarterly paying dividend stock that pays out 3.86% of dividend yield. And they have a growth rate of 11.44%, and they've been growing their dividends, and they've been increasing their dividends every single year for the last 13 years. So that's amazing. So let's bring over the 11.44%. So let's just type in 11 right here. And our annual contribution is $20. And our annual contribution is $20 a day, 5 days a week. So that's $100 times 52 weeks. So $5,200. Let's come back over here and type in $5,200 is going to be contributed to this account annually. And let's hit calculate dividends. And oh my goodness, we'll have a $1.2 million account. Here we go, guys. We'll have a $1.2 million account, bringing in almost we'll be bringing in $62,000 in dividends every single year, doing absolutely nothing at all. And you guys could scroll down. This is just in 25 years. In year 10, you'll be bringing in $4,000 in dividends. Year 20, you'll be bringing in $22,000 in dividends. Year 25, you'll be bringing in $45,000 in dividends. But most people like to retire after working 30 years. So let's just type in 30, and you guys can see you'll have a $2.4 million account and bringing in a six-figure account in dividends, bringing in six figures in dividends, $129,000 every single year in dividends, just from reinvesting your dividends and continue to invest just $20 every single day. So when we come back and look at QQQ in the S&P 500 or VOO, portfolio 1 is going to be QQQ, portfolio 2 is going to be the S&P 500 or VOO. This is us just starting from the year 2000, from the new millennium, 25 years. And us starting off with $1,000, add $800 to our account every single month. So that's around $200 a week. So that means don't go get that extra car note. Just stay in the car that you get. Go get a cash car. You don't have to drive anything fancy. Don't go get that 4-bedroom apartment. Go get that 3-bedroom apartment. But find a way to save an extra $200 a week. And then we're going to hit analyze portfolio. And bam, let's scroll down just a little bit. I already know these numbers going to be crazy. So QQQ, you'll have a $2.8 million portfolio just after 25 years. The S&P 500, you'll have a $1.5 million portfolio after 25 years. And as you guys can see right here, this is how the charts will look. QQQ, you'll be up to 2.8 million. And then in S&P 500, you'll be up to $1.5 million in cash, cold hard cash, just from daily dollar cost averaging inside of those two ETFs. So you don't have to try to predict, time the market, just dollar cost inside these 3 ETFs, and you should be successful inside of the stock market. If you're having problems finding good quality stocks at a good price, if you don't have time to look at the markets every single day or every single week, if you want to get your time back and take all the stress off the stock market, just invest inside those 3 ETFs and you should be fine 20, 25, 30 years down the line. Dreamers, let me know which one of these 3 ETFs is your favorite down in the pinned comment section. If you guys do want to check out those videos of how much money I made from dollar cost averaging so far, please check out those videos. And if you do want to join the Patreon, the link to Patreon is going to be down in the pinned comment section. If you do want to pick up some free stocks, I'm going to leave a link to Moo down in the pinned comment section as well. But don't forget, if you made it to the end of this video, please hit that thumbs up button and hit that subscribe button. That helps out this channel more than you guys can possibly even imagine. And comment down below which one of these 3 ETFs is your favorite to invest into. But in that, guys, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.